Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everybody. This is Harold Green of Brightree Financial Group, and it is time to stop doing what you hate. I hope you are having a fantastic day. As always, I'm looking forward to sharing today's show with you because, man, it is something that you probably hear from people all the time. And I'm not going to get into it right now, but it's going to be extremely interesting. You know, I hope you've had a fantastic day and that things are going well in your life and that you're looking forward to the future. You're looking forward. You're not looking backwards, because I tell you, every time you look backwards and you're driving forward and you're trying to go forward as fast as you can, you look backwards, it only takes a second before you wreck things up. So I'm going to tell you, keep your eyes focused forward, continue to believe in great things, continue to believe that great things are going to happen to you and for you every single day. And that's my little bitty pep talk before I get into today's show, titled, What Happens If the Stock Market Crashes? That's right. What happens if the stock market crashes? People ask me that question all the time. It's so funny because I understand where they're coming from, and they're probably coming from some concern that they have based on what they probably heard somebody say in regards to the market. And I do read a lot of commentary too. I do hear a lot of commentary, but you know, the ones that are saying stuff like, you know, the stock market is going to crash, or these are probably people that do not have money invested, you know, in the stock market. It's like somebody saying, someday your house is going to burn down. Someday your house is going to burn down. They probably don't have a house themselves, and they're afraid of buying a house because someday they think it's going to burn down. That's like the dumbest thing I've ever heard, but you're going to hear it. You're going to hear people say the stock market is going to crash. You're going to hear people say you're going to lose all your money, so you shouldn't be there. You're going to hear people say that. You know why? Because people say whatever they want, and this is a free society, and people can say what they want, unless you're on Twitter, and then you get banned or canceled or whatever. But you know, for example, I hear clients come in and they tell me so and so at work said, you know, they did this to their portfolio because they think the stock market is going to crash. I was like, well, who is so-and-so? What do they do for a living? Oh, they work in your department. Oh, how many people have they helped put through college? And how many people have they helped retire? How much money have they made in their own portfolio? And, you know, when you start to break this stuff down, it's people talking out of their fears, and they're talking out of a place where they don't really know anything about, because they've seen the market go up and down, and they've seen it go down and they've lost money. And so the market going down and you losing money is not a stock market crash per se. That's either a correction, right? You know, and we talked about a correction, or it could be a downturn. It just kind of depends on how long it lasts and what the percentages are. And so I want to talk to you about what happens if the stock market takes a plunge. There's something called the circuit breaker. And what the circuit breaker is it's a mechanism in place that when either the S&P or something like that goes down by so many percentage points, they halt trading. And the reason why these markets become disruptive like that is because of order flow. They either have too many buy orders or too many sell orders, and they can't get these orders out of the system fast enough. So it causes more selling, and selling begets selling. And the next thing you know, it's going to bleed itself to death unless they correct it, right? The buy orders can't keep up with the sell orders, because when the market starts to tank, not everybody is selling. Some people are actually buying. And so they instituted something back in, I think it was 1987. But I want to go back and take a look at history and kind of tell you what happened as a result of just things in history. So again, past performance is no indicator of future results. All investments do carry the risk of loss. I do advise you to go and seek your own professional advisor and get an assessment based on your risk scores and different things like that. So I want to go back and talk about some notable stock market halts and closures throughout our history. And the first time the stock market halted itself was back in 1865. That's a long time ago, and that's when the New York Stock Exchange shut down because of the assassination of President Abraham Lincoln. And of course, that was a sad time in history, but the stock market is just that old, 1865. And a lot of us probably don't remember that when that happened because we weren't around. But stock markets, they do go through these types of blips and twists and turns. But I want to share with you, just because the market takes a tumble doesn't mean every single stock in the market is taking a tumble with it. And so we have to differentiate between a correction in a particular stock or a correction in the market in and of itself. All right. So some days, some stocks are up big when the market is down, as a whole, and vice versa. 1873. And it says a Philadelphia banking firm known as Jaycock and Company goes under after weak demand for its railroad bonds and so on and so forth. July 31st, 1914, World War I breaks out and the stock market is halted for 4 months. 4 months. It was halted for 4 months. That means you couldn't buy anything or you couldn't sell anything. Now, this is pretty scary because if you're depending on your portfolio to generate you a certain amount of money and you don't have that in cash, if something like that ever happens, which it won't, because they've put these mechanisms in place where they stop trading for 15 minutes. And so when clients say, well, what happens if the market crashes? Well, again, the circuit breaker kicks in and they're going to halt trading for 15 minutes, then it's going to resume. So I want to go a little bit closer to things that you can probably remember. 9/11, the market took a tumble and it lost, 7%? So that was pretty crazy. The market remained closed until September 17th, as fears were prevalent that the quake of panic over the attacks will lead to massive sell-offs. When the New York Stock Exchange did open, the market lost 7%. 9/11. We all remember that, right? Where were you back then? 2008, that's when we had the housing market crash. And the company went into a brief recession back in 2008. And you guys have heard me talk about this, where within, I think it was a year and a half, we were right back where we were before the recession. Like it had never happened, right? Again, not all companies at that time lost money. If you look at like ExxonMobil, Chevron, places like Archer Daniels, places where people had to eat, or produce food or goods and services, they did okay. They didn't lose a bunch of money like, say, technology did. So it's extremely different. Now, the one you can probably remember the most was March 2020, because that's when we had the pandemic. But the thing is that wasn't just like a one-time deal. They halted trading several times between March and May of 2020 just because of that. So the first one's March 9th. 3 days later, March 12th, they halted trading again. And so I think from there, it didn't happen again. And then we just took off. We took off in March. And so what I wanted to share with you is there is a possibility that they could halt trading, but the market is not going to crash all at one time and you lose all your money. It's going to be a gradual thing. We go into recessions gradually. We go into bear markets gradually. So if you're paying attention to your portfolio or you have someone paying attention to your portfolio, adjustments can be made based on what is being seen. So I told the client, I said, bottom line is this. If something happens, we can always sell. We don't need to stay here and watch the portfolio go down. You can sell if you feel that uncomfortable, and that is okay. However, I think that if you do sell, you ought to turn right back around within a short period of time, depending on the type of portfolio you hold, and start buying again, because it's not going to last forever. So I just wanted to share with you folks that anytime you hear someone talk like that, don't pay them any attention. If you have questions or concerns, call your financial advisor and talk to them. Make sure your portfolio is set up in the right way, the short term, the long term, and the intermediate, and then you don't really have to worry about these things, okay? So thanks a lot for letting me rant and rave at you about what happens if the stock market crashes. And until next time, everybody, 1, 2, 3, let's get it.
This is the podcastfactory.com.